Everyone, I hope you're having a great day. This is Abby with She Invests in Real Estate. Today's episode, the first step to buying your first rental, and it's not what you think. We are going to talk about kind of myths, what buying your first rental looks like. I think everyone's first step or thought of first step buying their rental, would be to save for a down payment. And that's actually like not where a smart investor would start. So it doesn't start with the money. Like as much as people think it does, and the money is very important. I am not going to discredit that. It actually doesn't start with the money. And a wise investor told me once is that if you find the right deal, you'll find the money for it. and that's not true for everything. But I do believe that sometimes when we first start our real estate journeys, it's really hard. I always tell my clients this. I tell the women that I teach investing in real estate to, buying your first rental is by far the hardest one. It is. It is the hardest one. And then after that, you kind of learn some tricks of the trade. You learn different pieces of investing. You kind of look where you can leverage. You become more attuned to the financial side and what moves need to be made. And it's so much easier from there. But the first one is the hardest. And part of it is because you don't know where to start. Or you think it starts with the finances. So though that's important, it's actually not everything. And it does matter how you start because you focus on finances, you might be saving for years and not have, a clear path forward. So that's a misconception. People start with the money, a lender, and then sometimes you kind of just start with Zillow scrolling. That's the other thing you do is you can just get into a time warp of just like sitting there and doom scrolling different listings on Zillow. And I've had clients do this. I've had clients, jump in without clarity, without knowing what their true goal is, and a lot of time's wasted. And real estate historically doesn't get cheaper. It does in different little micro, pieces of time, but over time, historically speaking, real estate doesn't get cheaper. So it can actually cost you, I guess, in a sense, if you want to think about it that way. So that's the truth. So this is the real first step. What you should actually know about investing in real estate is you need to get clear on what your investor identity is and what your goals are. People don't think about this enough. And I don't mean to jump on a high horse or a soapbox when I talk about it. If you are a W-2 girly working corporate or finance, we have to be really realistic about the time that you have available to this property. If you, work part-time and you have a decent amount saved and you're kind of like an entrepreneurial hustler and you've got, time on your hands, that's an asset. That's a value add. Maybe you can do something else. This is what it looks like. And you can have a property where you're putting some sweat equity into it. You really need to break down what your investor identity is. And that's what I teach my clients. I teach women how to get clear on this path because it's not always clear. And I think that you can go online and you can see so many different things and you just don't know what's best for you. It could be a house hack. It could be a long-term rental. It could be a mid-term rental. It could be a short-term rental. It could be a multifamily syndication. It could be commercial. It could be a triple net. It could be so many things. It could be a REIT, all sorts of stuff. So we need to figure out what type of investor you're going to be. And we need to kind of figure out what's your why. What's your end game? What's your goal? When I first started, this is so dumb. I'm so sorry. This is so dumb. I wanted to have 30 rental properties by the time I was 30. It's so silly. That was not necessary. I just thought it was going to be a cool thing to say. Whatever. But when I first started and I wanted one property and then I wanted 5 and then I wanted 10 and I kind of I'm not going to lie, this is one of my own faults in my journey is that I got halfway through this path and I'm like, what am I doing this all for? I have no idea. Now I have a bigger why. I have a toddler, I'm married. I do want to build a legacy for myself in a way. I wanted to have assets that I invest into. It can be as simple as that. You want an asset to invest into that's not the stock market. It could be that simple. But having a little bit more clarity on my hands and like a better end game for me probably would have saved me a lot of heartache. And a lot of my investors, if they kind of start before they talk to me and then we get into it and it's like, what's your why? And you don't have a clear definition on that, you can kind of just like go through the forest blindly and hit some trees along the way. So I think that's the first step. Journal it out. Think about what you want your life to look at. Like, think about what you want your goals to be. Think about what you want your income goals to be. What type of investor do you want to be? Do you want to be hands-on? Do you want to be hands-off? I'll tell you one thing. I'm going to tell you this right now. There is no such thing as a truly passive real estate investment unless you're doing like a REIT or something where like a managerial company is doing it for you. If you're owning an asset, you do need to understand that this is going to take some fraction of your life and you need to be okay with it. Another soapbox. This is not easy. Like this is not simple. This is not easy. This takes hard work, dedication. It takes money. It takes time, and it's not for the faint of heart. So just know that it's never going to be truly hands-off. You might be someone that works a corporate W-2 job and you can totally do this. I am not trying to scare you, but it's always going to involve some sort of time. And it's not necessarily all passive income, especially right away. So want to make sure you know that. We also need to kind of think about where you are and what markets you're in. Where do you live? A lot of my students are in America. A lot of them are in Midwestern towns or metro markets with suburbs. And, I do have some girlfriends that live in New York and LA that invest in real estate. Their strategies are a little bit different. And you can always invest locally, but there's opportunities to invest out of state as well. So kind of get an idea. Do you want your asset to be close to you? Do you want to be able to follow, your local market where you live and be, within an hour, half hour of your house? Or are you okay kind of out of state investing? I don't necessarily suggest that to start with, but think about that because your clarity is going to drive, smarter funding. Your deal analysis will make much more sense, and team building later on. So let's take some time and try and hone in on what you want and why. For some friends of mine that are investors, they wanted one rental per kid. And they wanted to, put it on a 15-year loan, and they wanted it paid off by the time the child graduates high school. And then it's like whether they go to vocational school, whether they go to college, whether they want to start a business, they have an asset that they can use and liquidate or borrow against to fund that for their kids. So I think that's super cool. That's another good example. My W-2 corporate girlies, it could be long-term rentals. It could be short-term Airbnbs. So just think about that. And then action step, as far as like how to go about it next. This is a very simple action you can take this week. You're going to grab a notebook and you're going to you're going to write down kind of what we just talked about, your why, your investor identity into one sentence. So, next episode, I'm going to work on building a buy box and how that looks and what you do to build a buy box, how it can change, and the filter that's going to make finding deals 10 times easier. But I really think that this is something you should meditate on or pray on. You should think about heavily of what you want it to look like and, income goals with that. We can reverse engineer some of this stuff. It's not complete rocket science, but without the clarity and without understanding where you want to go, it is very, very difficult to figure out what the next step is. So do that, grab your notebook, define your investor identity, think about what you want your goals to be, what time you have associated, where you want to be, and then I'm going to work on a buy box lesson plan for everybody. But your first door, it starts with direction, not a down payment. So make sure to follow me on here, follow me on Instagram, send me a DM, and I am excited to talk to you about a buy box next time. So I hope you have a great day. Thanks. Bye.